Hi. There's a term that I like to use, and it's called an audit gone bad. I'll tell you when you get an audit gone bad is when you take the attitude of a lot of people. I got nothing to fear. I haven't done anything wrong. They can come and audit me if they want. They'll find out that I'm an honest, hardworking person who pays my taxes and files my tax returns. That can be true on some occasions. But that's really not what you have to think about or what you have to fear. What you have to fear is you haven't done anything wrong. You paid your taxes, but the audit goes wrong. The auditor comes in and does a net worth assessment on you, and you can't explain how your net worth grew. And the net worth assessments are not factual. They're assumptive in nature. And you find yourself unable to explain your increase in wealth, and you don't know how to fight it, and lawyers are often really hesitant to take on net worth assessment because it's difficult to deal with. It's not about law. So an audit can go bad when you thought that you could write something off, and you couldn't. An audit goes bad when you thought that you could flip a house a year and it wouldn't be called income, and you didn't even know about the minimum tax of 48%. That's an audit gone bad. You might find that all these things that you took for granted were yours were taxable benefits. You might have been advised to incorporate, and you might have had shareholder loans that you didn't pay back. Now you find out that not only do you have to pay tax on that money, but the corporation is taxed and fined. So you get penalties, the corporation gets penalties. That's an audit gone bad. You may have an auditor who has no experience whatsoever and makes up absurd reasons for disallowing expenses because they don't understand it. So, yeah, you need to be afraid of a bad auditor, and you cannot treat an audit frivolously. What I tell people when they come to us and they say, well, I don't know if I should hire you before I'm audited or afterwards. And what I tell them is, well, you can hire us now for half the price, or you can hire us after for twice the price. Because afterwards, it's twice as hard to fix it. When CRA hangs their hat on a number, they don't want to change. They want to get $1,000 an hour for every hour the auditor worked on your file, so that's what they're going to go after. Budgets to fulfill and forecasts to make. And they're called Revenue Canada Agency for a reason, revenue. That's what they're about. So rest assured, when CRA comes calling, there's a very strong possibility you're going to pay tax, and if that audit goes bad, you're going to pay way more than you should, and the cost to deal with it can be onerous. The costs do go on and on. My strong advice from experience, don't talk to the auditors. Hire a representative, get your bookkeeping done audit ready, don't let them in your house, and make sure that you're protected from the audit going bad. Thank you.